Everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. market update. As you can see by the background, back up in the mountains for the holiday weekend. Boy, interest rates continue to march higher with the 10-year moving up almost vertically. Many experts feel like this latest round of lockdowns in China is going to have a greater effect on global inflation than even in 2020. And that's because the global exports from China has actually increased to 15.4% in 2021. And oil is breaking out of its symmetrical triangle. Boy, if you're an S&P trader, you really have to understand how oil affects the markets. We're going to take a deep dive into that in this recording. Let's take a look at the charts. At the time of this recording, it is late on Thursday evening, and as a reminder, the markets are closed tomorrow on Friday for observation of Good Friday. Before we get to the charts, we did it. Thanks to everyone for helping us reach that 30,000 subscriber goal on our YouTube channel, Elliott Wave Options. Stay tuned to the end of the recording to see if you are one of the 5 lucky winners of our new AI-based time strategy alert service. All right, taking a look at the charts, you can see with the S&P that we had a move to the upside on Wednesday, move back down on Thursday. So when you see that kind of price action, you automatically want to just take a look at volume. And you can see that on the bounce up yesterday, we were below average on volume. On the move lower today, above average on volume. Now some may say, well, that's just a lot of position squaring going into the holiday weekend. And that could be. Taking a closer look at the charts, you can see that the 10, 30, and 50-day moving averages are all converged at the exact same spot. And for the last 4 trading sessions, basically we've tapped those moving averages on the high and traded lower throughout the day, whether we ended up to the upside or the downside on either of those 4 trading days. So a lot of sideways movement here, basically right at this level of support at 440. If we break that level, you know where we're going. Back down to test those lows in the 420 area. So if position squaring was going on this week in front of the holidays, we'll see what happens moving into the beginning of next week. As I mentioned in the intro, interest rates on the 10-year going almost vertically to the upside. Look at that. I think it's worth noting that interest rates dropped a little bit on Wednesday's trade. Market was up. Interest rates back up in Thursday's trade. Market's down. Are the markets starting to move even more in lockstep with rates? I think with rates getting as high as they are, that's a very likely scenario. Now, if we take a look at the 10-day moving average, you can see that even as vertically as they've moved, we're not that much overbought. In fact, the low of the bar today basically touched the 10-day moving average. So from that standpoint, we're not really overbought. One thing to watch, though, and I've talked about this, you've heard me say numerous times, no security in any time frame gets very far away from the 10-day moving average. But the other thing is that the 10-day moving average and the 50-day don't separate significantly for long either. And there's starting to be some pretty good separation here. So at some point in time, it seems as though interest rates are going to need to calm down a little bit and close this gap. Now, it doesn't mean that that's going to happen immediately, but at some point, maybe when it hits 3%, something like that, is when you might see interest rates calm down a little bit. I think the markets would welcome that, certainly. Taking a look at some of the other markets, taking a look at the Qs, boy, this is about as well-formed of an Elliott Wave 5-wave impulse pattern as you could ask for. We had a nice wave 1, bounce in the wave 2, bunch of zigzags there. In the wave 3, you can see multiple zigzags moving down. I really like trading zigzags within the wave 3. And then the wave 4 corrective bounce right to that 61.8% fib level, my favorite fib level because I feel like it's the strongest level. And then we've started marching down, really marching right down along this projection line down to the tap box, which stands for time and price projection, on where the Qs may go. Now, that line doesn't normally say that, hey, we're going to march right through there. Usually you have ups and downs along the line. It's just kind of a guideline. But it's interesting how it's just marching right from that line down towards that potential wave 5 target. Now, we have to break those lows at 320 first So it does seem that the Qs are wanting to head down to test that level. I've also said many times I do feel like the Qs will underperform the rest of the markets this year. And I'm not saying that the markets can't finish higher on the year, just saying that the Qs will underperform both the S&P and the Dow. That's my opinion, and that's the way things usually work when you're in a series of higher rates. And the Federal Reserve hasn't even really gotten going yet. Thought we'd also look at gold, and then we're going to start talking about oil, as I said in the intro. Gold broke out of its symmetrical triangle. Nice breakout to the upside. If we bring the 10-day moving average on top here too, you can see that that wave 4 correction was right at the 61.8% level as well. So pretty solid support there for gold. And if we look at the moving averages, you can see we got just a little bit overbought in yesterday's trade. Came back down on the low, tapping down near the 10-day moving average, and then closing near the high of the day. Not on the high, but near the high of the day. So things look pretty solid for gold, at least so far. Now, in the intro, I mentioned that if you're an S&P trader, you really need to understand how oil affects the markets. And some of you may say, come on, oil only represents 3% of the S&P. Really doesn't have that big of an effect, but it does. It's the ancillary effects that you need to take a look at with oil, in my opinion. So here's a chart of USO, and I also said in the intro that we were breaking out of this symmetrical triangle, and you can see that's a pretty strong breakout to the upside. Is oil going to go make a new wave 5 high? And it looks like that's a possibility. It does seem like at least we're going to contest this closing high, and that could happen in the not too distant future as well. So oil helping to create inflation through many aspects. Get to that in just a second. But let's look at natural gas real quickly before. And boy, natural gas is just on a vertical move. And if you've listened to any of my recordings, you know I don't like it when things go vertically to the upside. Often when things go vertically up, they come vertically back down. Nonetheless, we are a bit overbought on natural gas right now. That's a pretty good separation from the 10-day moving average. So it does seem like perhaps we get some sort of a reprieve in the increase in prices in natural gas. Obviously, the news coming out of Russia, etc., is having a significant effect there, as it also is with commodity prices as well, going into wheat, fertilizer, all the things that go into food. Those things affect consumer discretionary spending. So look at those. So the consumer discretionary index here, the ETF, is the XLY that we're looking at, and it's at a point where it needs to hold right here around 180. It's not currently in a 5-wave impulse pattern. It's not labeled, so it's in corrective pattern, so it's in corrective mode. If it doesn't hold 180, then we're probably coming back down to test these lows. So when you think about paying more at the pump, in fact, for me, it cost $100 for a tank of gas in my truck to make it up here to the mountains. $100 for one tank of gas. So that's amazing. I've never seen that before. So what does that do? It takes money out of your pocket, so you have less money to spend. So even though oil itself may only represent 3% of the market, then you start thinking about stocks like Amazon. Amazon has a double whammy, right? So the transportation costs are going up. What does Amazon do? They transport like crazy to get your stuff to you in 1 to 2 days. And so those are increased costs for them. So as their costs go up, that affects the bottom line, right? And then in addition to that, the consumers that are buying stuff from Amazon have less money to spend. So they're not buying as much stuff. It's costing Amazon more to send the things out that are being bought. You can see why Amazon is reacting negatively as the price of oil is moving to the upside. It's in a 5-wave impulse pattern, but just barely. Boy, that wave 4, the 77% corrective level, it disqualifies at 78.6, so that's pretty close. So perhaps Amazon only comes down and tests these lows in this area and maybe doesn't make that new wave 5 low, but because it's still technically a qualified pattern, I wanted to show you where that wave 5 could potentially be. talking about consumers and the money that they don't have to spend when they're spending it on oil. Robinhood. FINRA says that, or at least according to FINRA, the average account holder at Robinhood only has $240 in their account. So if the average account holder at Robinhood has smaller accounts and now they're paying significantly more money for gas, now they have less money to trade with. So that affects trading as well, as consumers again have less money to spend on all these different things. Everything's not doom and gloom though, right? There's always places that you can go that'll do well in any sort of environment. Commodity prices are moving to the upside. Here's the DBC. We looked at that before, and it is breaking out. We looked at this really well-formed symmetrical triangle. I said that may be one of the nicest patterns in the market in the last recording, and there's the breakout moving to the upside from that just perfect symmetrical triangle. So commodity prices moving to the upside. That's inflationary though, right? Well, what can benefit from that? So far, food is benefiting from inflation. The fact that they have pricing power, their costs are going up, but so far they have pricing power. And if you've been to the grocery store lately, you know that. The numbers are that the average grocery bill has gone up 20%. I don't know about you, but my average grocery bill feels like it's gone up a lot more than 20% lately. But look at a chart like Coke. You can see here Coca-Cola moving just vertically to the upside, powering higher as, again, pricing power due to the inflationary nature of oil, commodities, foodstuffs, etc. In fact, you might want to look at something like an ETF for the food and beverage industry. This is symbol FTXG. There's other ones out there you can look at. But again, market where the S&P is moving down significantly with the weight of everything that we've talked about, but there's places that are moving up as well based on what is occurring from this inflationary environment and higher rates. Looking at Canada, the EWC, note that the 5-wave impulse pattern is no longer labeled. We broke that 40 level. That was so important. We had moved above it. I'll bring the moving averages back on. And you can clearly see here with the 10-day moving average that when we broke above it, we were a bit overbought. And the move was pretty vertical. When I said that, well, the best thing that could happen is consolidate on top of that and then try to break higher. Well, it did just that for a while, and then we've broken below it. But notice that for the last several trading days, the high has hit that 40 level almost every single day. So that can be viewed as a positive as well. Consolidation underneath resistance, try to gather some strength and momentum and make another run toward potential new highs. We'll see how that plays out. For right now, the Canadian market is playing ping pong back and forth between the 10-day moving average and the 50-day moving average. Goes up and hits the 10-day, comes down and hits the 50, and one of those two is going to give. We're either going to try to break above 40 or we're going to give it up and head back down towards 39. Wanted to show you the ASX for our friends down under. We had that breakout of that really nice symmetrical triangle here, and then you can see this big move to the upside going up almost vertically here, and then moving into another triangle, which it looks like they're trying to break the upside out of that one as well. Elliott always said, don't forget about the small triangles. So, resources, etc., helping the market. Is Australia about to break to new all-time highs? Looks like that's a possibility here in the not too distant future. With Bitcoin, you can see Bitcoin's coming down and trading right around that 40,000 level. We've been in a bit of a trading range here for quite a while, between 48,000 and 36,000. It's kind of a wide range, but you know the deal with Bitcoin. Every support resistance level is at a 4,000 point level. So we went up to 48,000, couldn't break that. You can see where that was resistance here. And then we went down to 40,000, and we're trying to hold that after a brief stint right around 44,000. That didn't hold, so we've broken below that, and now we're trying to hold 40,000. If we don't, then 36,000's next, and from that point on, it could get ugly. So 40,000 needs to hold. They're trying to hold it there. At the time of this recording, it's trading just under 40,000 at 39,000 and change. All right, before we look at the VIX, here's a listing of the 5 winners. Congratulations to all of you. And all you need to do is go to the website. There's instructions there, ewotrader.com. Hit the support button, and we will get in contact with you and get you all set up with your alert subscriptions. Again, thanks to everybody that participated. We had a lot of really funny Chuck Norris one-liners and said let's have some fun with it, and you all did. So we appreciate it very much. All right, looking at the VIX, with everything that we've covered, you'd think, wow, volatility must have skyrocketed. Not really. Even on today's move lower, finishing near the low of the day, the VIX was kind of uninterested. So what does that mean? The stuff with China is not priced into the market? Any sort of snowball effect moving into other countries? We already talked about the impact of oil, inflation, etc. Germany's dropping their GDP forecast. Countries all around are, and then Russia's threatening where you have to buy oil in their currency, etc. So there's just so many ancillary movements to this increase in the price of oil. But today, at least the VIX was all right. It went up a little bit, but not that big of a deal. So is the VIX telling us that one, hey, calm down, next week the market's set up and could have a bounce or rally? Or is the market just like, we haven't really priced in all this negative stuff yet, and if things get really bad, the VIX could spike back to the upside? And I've been a little bit leery of that possibility, as you know, because the move down was so vertical. Things work in each direction. If it goes vertically up, it likely comes vertically back down, so it has to work the same in the other direction. So far, not really, just a little bit of a bounce higher. But we'll see how next week plays out. Obviously, everybody looking for any sort of further news out of China or spread of this new variant, etc. But thought we would go into how oil, even only being 3% directly affecting the market, spreads out, and the ancillary effect is significant. So I hope you found that informative. Hope everybody enjoys their holiday weekend. Look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.